Amazon raised their 2026 capex by $20 billion, but the CEO, Andy Jassy, says it won't say how it's paying for it. Nothing to share. Oh, I'm sure this is going to get people rubbed the right way. I'm sure they're going to love this. Just weeks after its bond sale, Amazon told Wall Street it now needs an additional $20 billion in capex beyond its original plan. On Thursday, CEO Andy Jassy announced the e-commerce giant is raising its 2026 capital spending target from $200 billion to $220 billion due to soaring memory chip prices. During the second quarter earnings call, when an analyst asked about Amazon's funding strategy for future AI and infrastructure expansion, Jassy demurred, quote, nothing to share today, end quote. Jassy said Amazon has already tapped the debt markets this year and still has multiple financing options available as it continues investing in Amazon Web Services growth, adding that the company will choose the most appropriate funding method when that is needed. The CEO said that even with $220 billion in capital spending, Amazon won't have enough capacity to meet all customer demand this year. Unbelievable. Quote, I believe this dynamic will also be true in 2027. And he goes on to say, in fact, the demand we have for 2028 is striking. End quote. So I know that the capex is going up here, but he's basically saying like, we have to because the demand is not only there this year and next year, but like it's already starting for 2028. So spend away, Amazon. They've already shown that they can turn on the profit jets pretty much whenever they want. Amazon Web Services posted a 37% revenue growth to $42.2 billion in the second quarter. That beat analyst expectations of 31.2% increase, smoked it rather. CEO Andy Jassy called its Amazon Web Services fastest growth in 18 quarters, adding that both Amazon's AI and chip businesses have surpassed $25 billion in annualized revenue run rates, or ARR. Amazon's free cash flow swung into the red, falling to negative $7.6 billion over the trailing 12 months in the second quarter. That's down from a positive $18.2 billion a year earlier. Earlier this month, Amazon said it plans to raise $25 billion through a multi-tranche U.S. dollar bond sale to support corporate needs, including AI-driven capex and the upcoming debt repayments. The offering spans 8 tranches with maturities from 2029 to 2066. In March, the company raised $37 billion in an oversubscribed bond sale. The company has told its underwriters it does not plan to issue any additional debt this year, and that was reported by CNBC. Amazon did not immediately respond to Benzinga's request for comments, but as always, we'll update you should we get that. Despite the strong revenue growth and operating cash flow, Alphabet, ticker GOOG, Amazon, AMZN, Meta, ticker META, and Oracle, ticker ORCL, are expected to see forward free cash flow shrink to near zero or turn negative as AI-driven data center spending surges. Moody's estimates sector capex could reach $785 billion in 2026 and nearly $1 trillion in 2027, prompting hyperscalers to issue around $175 billion in debt this year, far above the 5-year average of $30 billion. Shea Ballure, chief market strategist at Futurum Equities, said investors are underestimating the extent to which AI is reshaping big tech, forcing companies to shift from asset-light models to ones that require massive infrastructure spending. Meanwhile, bond investors are growing more cautious, with credit spreads on major hyperscaler debt widening to about 78 basis points from 50 basis points in just 2 months, reflecting increased concerns over rising capital needs. So that story's hasn't gone anywhere yet. Amazon is clearly being rewarded today despite hiking their capex, but the worries are still out there, and this is definitely something that we're still going to watch.